Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Tuesday, October 18th, 2022, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, futures are rather strong, following up on a really excellent day yesterday. We've got futures up again. Looks like we're going to have a nice little gap up. Let's see. Currently, we have futures, and keep in mind, this is about an hour and a half before the market opens. But currently, we have futures, Dow futures up nearly 500 points. S&P 500 futures up 68. NASDAQ futures up 237 points. So certainly looks like the rally we saw on Monday is about to resume. I do have concerns about this rally, and I'll talk about that in just a little bit. But first, let's go ahead and go through today's agenda. I'm going to start off with the daily market recap, then talking technically, sectors, blog highlights, earnings spotlight, and the three you must see. First, before we get into any of that, though, I do want to take everyone over to earningsbeats.com, where we do have a free newsletter. I want to make sure everyone gets a chance to sign up here. Go to earningsbeats.com. Scroll down, you'll find this area. All you need is a name, email address, hit the subscribe button. No credit card required. You can unsubscribe at any time. This is a 3 times a week newsletter published on Mondays, Wednesdays, and Fridays. I can tell you it's a very, very quick read. Normally just 2 paragraphs and a chart, something to think about for that particular day. Many times it focuses on something like earnings gaps, candlesticks, price volume, trend lines, most of the things that you're going to consider in technical analysis. But another reason for signing up for this is we do a lot of free events. We actually had one last night where we talked about the upcoming earnings up this week. So it was our Q3 earnings sneak preview event. Again, it was a free event. Anyone on our Earnings Beats Digest newsletter was invited. We have a huge event that we're about to announce. It's going to be out in just a little more than 2 weeks, dealing with the manipulation in the market. So there are a number of areas in the stock market where manipulation takes place. And if you're a trader, especially a trader, you need to be aware of these. Otherwise, you are behind the 8 ball when you're trying to make profits. You need to be aware of the manipulation that takes place. We haven't announced that event yet, but we will invite everyone that's on our Earnings Beats Digest newsletter to attend. So just another reason, all these free events that we do, another reason why you want to be on that newsletter. Tonight, now this is a members only event, but we do offer a 30-day free trial. You can click on that green button there and start a no-cost trial. 30 days, you do have to give a credit card on that one, so we can get you set up in our system. But it's a monthly options max pain. I wrote an article over the weekend about the fact that we're probably looking at a big rally ahead, and that was mostly because of options expiration week. This is another one of those periods where you've got to be careful with manipulation. You could have the best short in the world going into this week, and all of a sudden profits can just be pulled out from under you as the stock rebounds for no reason whatsoever. Or, when the market's really strong going into option expiration week, and this is more the tendency because normally we're strong going into option expiration week, but then normally it's the other side. You're in these stocks on the long side, you're making a lot of money, your calls are deep in the money, and then you get a pullback. And it may not seem like much to just somebody looking at the chart, but somebody who's holding an option, it means a ton. Or even if you're trading individual stocks, you can watch your profits vanish heading into option expiration week. I call it opposite George week, and I'll talk about that more in just a minute. Anyhow, make sure you sign up for either the free newsletter, or if you'd like to join us tonight for this monthly options max pain event, all of our free, even 30-day trial members are invited to this. So just check us out there. All right. So I talked a little bit about the futures. I just wanted to show you one thing on StockCharts. If you go in and you click on symbol summary and then type in any symbol, it'll give you the pre-market or post-market after hours quotes. So here's the diamonds. You can see 1.62% up right now. The spider, there's your 1.85%. And then the QQQ tracks the NASDAQ 100, 2.11%. So not only up $8 yesterday, another $5 today. That's over $14 now that we've seen. This is more than 5% on the NASDAQ in one day, plus pre-market the second day. Again, the call I made over the weekend in my blog article, I'll show you the article a little bit later. Options. There are a ton of net in the money put options, put premium that are out there right now for market makers. And there's financial incentive for the prices of stocks to go up. They can commit their own capital to make that happen. Also, notice, we'll get into it in a bit, but big gap up yesterday, big gap up today. Manipulation works on both sides. When I talk about manipulations, it's not just on the downside. I believe some of this that we're seeing right now back to the upside is manipulation. It behooves market makers to take prices higher. All of a sudden, we've got a bid under the market. Scratch your head. I see it every month, many months. Anyhow, let's move on. Let's do the daily market recap. Dow Jones Industrial Average yesterday up 551 points. S&P 500 up 95. NASDAQ up 354. Mid caps up 62. Small caps up 30 on a percentage basis. The Dow kind of brought up the rear, only up 1.86%. The leader yesterday was the NASDAQ, 3.43%. Discretionary finished up 4.06%. Real estate, 3.73%. Technology, a little over 3%. Communication services, 2.75%. Financials, about 2.5%. And all 11 sectors were higher. Interesting. The other thing I'm watching too is the AD lines. One thing I'm asked all the time is, you keep talking about cyclical bear market. What would make this secular? Well, one thing that did change back in 2008, when the market went down for several months to a year, and then kind of rebounded a little bit, and the AD line looked pretty good during that whole period. And then when we went down, the big drop in the latter half, and especially the fourth quarter of 2008, the AD line took a tumble. Right now, even with prices moving down to new lows, we're not really seeing that yet in the AD line. So for those of you who believe this is truly a secular bear market, we should see the AD line going down. You can't count on gaps to take the market down for another several months to another year or even 2 years. There's got to be distribution involved. These AD lines should come down significantly. Just not seeing it across the board. I mean, yeah, they've come down a little bit, but the market's come down a lot. We could go up for a couple of days and we could see the AD lines breaking out to new highs. That's not secular bear market behavior. So I'm definitely still in the cyclical bear market camp, but I also think that short term, we could be getting manipulation to the upside. 10-year Treasury yield this morning, let me give you that number because it's still hovering right around 4%. Yeah, it's down 1 basis point to 4%. Crude oil prices this morning, I did mention that, flat at $85 a barrel. So I want to move on, though, because I want to show you the S&P 500. So this is talking technically. And here, I always like to start off with the S&P 500. Look at the failure here at the 20-day back on Friday, and then the sell-off, and then we're right back up near the 20-day. One thing I would just caution you about, if you didn't listen to my show yesterday over at Earnings Beats, is the 20-day moving average is normally what I look for when we're trending in one direction. I usually look for the 20-day EMA to be resistance in a downtrend or support in an uptrend. But the exception occurs when you get a positive or negative divergence. So in a downtrend, you're going down. Look at the PPO. We go down, PPO goes down. We bounce up, PPO gets a little bit of a bounce. Go down again to a new low, PPO goes down to a new low. We get a bounce, PPO gets a bounce. We go down to a new low. Wait a minute. PPO doesn't go down to a new low. So we have what's called a positive divergence. Now, the PPO is simply the difference between two exponential moving averages. I use the default, which is the 12 and 26 day. You can see that over here next to the PPO. So it's a short-term moving average, the 12 period, versus a longer-term moving average, the 26 period. As you go lower and lower, that 12-day should be impacted more by current movement than a 26-day moving average. That's why when you're going down, the PPO usually goes down. When you get to a point where you've been going down for a while and then you make one more move lower, many times you'll see that PPO take a break and actually not set a new low with price. That is lower low in price, higher low in PPO. Positive divergence, in my experience, and what I look for when I see positive divergences is a reset of the PPO back to the center line. Now, that might mean that we go through the center line and keep going higher. It might mean we get up to the center line or close to the center line and roll right back over again. Look at back here in May. See the equal price, lower lows, maybe slightly higher anyway. Positive divergence, slight positive divergence. But do you see this move up? PPO very close to the center line. Didn't quite get to the 50-day, but that's the other thing I look for. The 20-day doesn't hold. See, look at this. 20-day resistance, even up here. No closes above the 20-day. 20-day resistance, 20-day resistance. On this move back up, never quite got to the 20-day, but it was resistance, went back down. Put in the positive divergence, all of a sudden we go through the 20. And then the S&P goes back to the center line. And then start back over again. All right, same thing here. PPO higher, price lower. I wouldn't be surprised, and I've been saying, I think in the short term, maybe we get to 3,900. Then we'll reevaluate. It's going to be a big resistance level. Look at the 50-day moving average rolling over right now at 39.23. You get back up to 3,900, we're going to be very close to a key resistance level, and then we're going to have to just kind of sit back and see what happens with the market. Sector summary. So I wanted to show you in the sector summary what I refer to when I'm talking about opposite George week. Look at the sector, or excuse me, the scooter of these various sectors that led yesterday. Leadership, I mean, if you look all the way down here to the utilities, for the most part, all of the lowest scooters or all of the areas that have been performing the worst led the market to the upside. Look at healthcare, energy, and even consumer staples. These, based on the scooters, are the three best performing groups. And they were at the bottom. They went up, but they were at the bottom. It's almost like everything reversed yesterday. I see this a lot with option expiration week. And it makes perfect sense because these stocks in consumer discretionary and technology, communication services, many of these stocks are heavily traded in options in these areas. And if they've been going down, anybody who's been playing puts is in the money. If you've been trading calls, there's nothing in the money. Price has been going down. You're just getting, you know what handed to you. But what happens if, when folks buy puts hand over fist, think about what happens in the market. When everybody's buying puts, market makers have to step up and provide liquidity. So they will sell you those puts. Now, if that's all they did and prices kept going down, market makers would lose a lot of money. Well, let me tell you something. Market makers don't lose money. So I can pretty much assure you that what they do when they sell those puts is they turn around and short the stock. That way they protect themselves to the downside. So every call they sell, they turn around and short 100 shares of whatever underlying security. That's the way they protect themselves to the downside. Well, after this goes on for a while, okay, so they're losing money on their puts, but they're making money on the short on the way down. What would happen if they cover their shorts and go long and start driving the price up? All of a sudden, they cash in on their short position, which has been making money. Their long position, because they start to turn the market back to the upside, their long position makes money to the upside. And what happens to the option premium when you go back up? All that net in the money put premium begins to disintegrate into thin air. Poof. It's a win-win-win for market makers. Opposite George week is a real thing. And that's a reference to a Seinfeld episode. You can go to YouTube and watch it. Basically, in a nutshell, George Costanza, always negative, always down on his luck, always thinks he's got the worst life. And Jerry Seinfeld, one day at lunch, they're having lunch together, and he's talking about how bad things are. And Jerry's like, well, if every decision you always make is wrong, why don't you just go with the opposite? And then so he starts thinking about what he's going to do. And he says, I'm just going to do this. And George reminds him, do the opposite. And so he starts doing the opposite, and his whole life turns around. It's actually a pretty funny episode. Anyhow, that's what I'm referring to when I talk about opposite George week. And I mean, look at this. Look at what's leading this week. Look at what's lagging this week. Everything in the market flipped on its head right now. May continue through the rest of the week. We'll see. But don't be surprised. Let's see. So let's just talk a little bit about sectors here. And with the sectors, I just wanted to show you the couple of aggressive groups. So first, we'll start off with technology. Technology has put in the lower low, higher PPO, positive divergence. If we go through that 20-day, just remember this discussion. 20-day, I think, is really important. If we can't, or if we can get through the 20-day, I think we can see the market run short term. Then we'll figure out from there. But this is an options related call. Watch that 20-day moving average. On a relative basis, technology looks horrible right now. I can't argue with the chart. We've actually, back in July and August, technology was leading that rally. Since we've rolled over and moved to a new low, technology is leading to the downside, setting new relative lows. Not a good look. How about XLY? Another key area of the market. Well, XLY is a little bit different in that we are holding the June low. Right now, PPO at the most recent low was pointing lower. There's no positive divergence here. So we could go through the 20-day, but I'm not looking for it because of slowing selling momentum. And when I look at the relative strength, consumer discretionary actually was doing well until mid-September, and now it's turned back down. Yesterday had a good day, but we're going to talk about that here in just a minute. The last one I want to show you is the XLC, which is communication services, going down. Really strong positive divergence here. And we went up and tested the 20 yesterday. With today's gap up, we're likely to be above. I wouldn't be surprised to see $52.50 to $53 on the XLC, just to maybe reset the PPO either at the center line or at least close to the center line, get that 50-day test. And then from there, all bets are off. We'll have to kind of watch to see what happens. If you're on the bullish side, you want to see the major indices. You want to see all of these sectors move back through the 50. And you want to see that 20 eventually turn back up and move through the 50. That would be more of a configuration of a bull market when price action's above the 20, which is above the 50. Right now, we have the opposite, but with options expiring. Let me show you something I thought was really significant I can just show you here. Let's just pull up the SPX here. I want to show you on a 10-minute, 5-day chart. Look at the S&P yesterday. Look at the gap up early in the session, and then we went sideways. There really wasn't a lot of buying. When I said at the beginning of the show that I had some reservations about yesterday's advance, this was what I was talking about. Move up, and we go sideways. This was accumulation. This is what accumulation looks like. Sold off with the PPI report back last Thursday. Then we were, there was buying all day long. Then we gap up on Friday, and they were selling most all day long. Yesterday, there was just a gap up and sideways action. There was really not a lot going on during the day. And that starts to reek of manipulation a little bit to me. So just kind of keep that in mind. The S&P 500 on this push to the upside, not really doing a whole lot. If I look at the NASDAQ, a little bit of upward trajectory, which might be a little bit of buying, market makers manipulating. But the interesting part yesterday was after the gap up, there was a good reason for the gap up. The 10-year Treasury yield yesterday gapped down. But the interesting part, that the lower interest rates, I think, definitely spurred the opening move to the upside. But look at the 10-year Treasury yield. It actually went up all day long and finished positive. You would think that this move up right here would create selling. After all, it was the move down that helped trigger a lot of the buying last Thursday. It was the move up that triggered a lot of the selling on Friday. Why didn't this move up trigger any selling? QQQ. I mean, look at the move down with the 10-year Treasury yield going up on Friday. All that movement to the upside, the yield yesterday, and the QQQ didn't go down. It's interesting. I don't make this up. All right, I want to show you blog highlights for a second. So bear with me. Let me just change the screen here. So this is one of the articles I wrote over the weekend. I haven't been active in my blogs, but I'll start writing a little bit more often. And by the way, if you want to follow my blogs, what you can do is any of the blogs that I write in, if you go to the bottom of the page, all the way down here, there's an area where you can subscribe at StockCharts. There's no fee involved. All it is an email address. And they're just making it easy for you to receive receive emails of articles from whoever you've subscribed to at StockCharts. So you can do this with any of the authors. A lot of great technicians here. If you like their work, go down to the bottom of their article and subscribe just with an email address. And the beauty there is as soon as my article is published, it gets emailed to you. You don't have to come and look and see whether or not I've published. So it's a really nice feature that StockCharts offers. Take advantage of that. But a couple of things. I was talking about the improving healthcare group right here. This is the last month. Healthcare has been very strong. And I broke down the group just looking at healthcare versus the S&P 500. That's now broken out to an all-time high, by the way. And then two of the groups that are leading it, we've had pharmas and we've had the healthcare providers. Well, they've all been leading, but healthcare providers you can see is broken out. Here's medical supplies leading, medical equipment leading, and then biotech has broken out. So biotech and healthcare providers are the two that really have done extremely well. The other article I wrote was over in the Don't Ignore This Chart blog. And this one was all about, and that you can read the title, Net Put Premium and Options Expiration Week suggest a huge rally ahead. That was written on Sunday morning. So what we saw yesterday and the futures, what we're seeing today, is all coming after this. Listen, I've been around the block a few times. I know when you go into option expiration week, you have to expect the unexpected. Market's going down. It looked horrible on Friday. After a big rally on Thursday, nothing worked on Friday. You wake up Monday morning and it's a whole different market. And leadership is a whole different group. Makes no sense whatsoever unless you understand options expiration and you understand the role of the market makers and you understand that they don't lose money. Option expiration week sometimes is a windfall for market makers. You need to understand what's going on. Anyhow, that's all I had. I just want to make sure you're aware of those two articles that are out there and be sure to subscribe. Oops, grabbed the wrong one. Let's try this again. There we go. Okay, so let's take a look next at earnings spotlight. Lots of earnings starting to come in. Many of the big names on the Dow, they tend to report early in the season, but we've got a couple really big earnings reports coming up in the NASDAQ, and I'm going to talk about those, a couple of those in the three you must see in just a couple of minutes. But let's talk about a couple of earnings reports that came out yesterday. One being, or this morning. This one I think actually came out this morning. Silvergate Capital Corp. Not sure. I didn't see the earnings or the revenues. I've just seen the reaction. But if we go up here and do the pre-market, and we'll just do this and look at the charts over here. But SI down almost 10% this morning. Been downtrending, 63.79. So it looks like it's going to be back down near the recent low here. The fact that it's downtrending, I don't know, maybe after a gap down, we'll get a rally, to fill the gap. But it sure does seem that this downtrend is headed for the July low. So not particularly strong this morning, and has not been very strong really over the last couple of months. Another company that reported, some of these are smaller financials. SFBS, this is Service First Bank shares. Actually, they were down a lot more earlier, but they've turned it around. They were down 5.5% earlier, it looks like now. They are flat. Let's see, Hasbro reported this morning. Hasbro down 1.27%. As far as some of the stocks getting a lift this morning, Goldman Sachs up $8. I was talking about this one recently, I think in one of my webinars, but I thought Goldman Sachs looked pretty good. It's in the investment services space. Actually, let's pull this one up, and I'll show you the relative chart on Goldman Sachs. So you look at the absolute chart, you don't really think much of it. It was down near the lows in June and July just recently. But look at the AD line. AD line was going down for the most part with price until June. And then it went up with price. And then as June rolled over, the AD line's not. It's just suggesting to me that maybe Wall Street will happily take any shares you'd like to sell. And if you look down here at relative strength, Goldman Sachs put in a relative low back in March, April, relative to its investment services peers, and now it's turning back up here. Then you look at investment services relative to the S&P 500, and since July, it's actually been a leader with a little bit of a pullback recently, but this has been a leading group. So I'm not surprised that Goldman Sachs is getting a pretty good pop to the upside. I would be watching maybe the 320 level up to the 50-day moving average. Looks like this morning we're going to open 314, 315 based on where we are right now. Of course, things can change over the next hour or so, but that's where we are now. So let's move on. Let's take a look quickly at the three you must see. These are three companies that will be reporting either later today after the close or tomorrow morning. Actually, I think one will report tomorrow after the close, or might just be later this week. Anyway, Netflix is going to be reporting today after the bell. AD line has improved. Price action's improved. We have not been able to get through 250 though. But look at the stock relative to the internet space. It's been uptrending in a group that's been downtrending. Very interesting look on the Netflix chart heading into its earnings. Tesla, been doing nothing really. Sideways action on AD, going down double bottom maybe with the May low. Relative strength, though, it's actually been one of the stronger auto stocks. So if you're in the auto space, maybe in Ford, GM, some of the others, you might take some cues from what happens with Tesla. And then the last one I wanted to show you was Travelers. Insurance has been a pretty good area of the market. AD line here, those flat. Price action, not so great. Relative price action has been on a downtrend. So while its group has been strong, Travelers has not, on a relative basis, really done that well. Be interesting to see how that report comes out. Anyhow, that's it for me. Appreciate everybody tuning in. Please be careful. It's option expiration week. Anything goes. I'll be back tomorrow over at earningsbeats.com for your next Trading Places Live. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.